Decades of research on the part of many professionals in the legal, accounting, financial, and tax industries have made it possible for residents of all 50 states to generate much greater wealth and enjoy an extra high 5 or even 6-figure annual tax-free income. What you're about to see may shock you or even anger you, but once you've watched this 12-minute video, you'll be pleasantly surprised at the ultra-effective methods and the guarantees the government invites you to use to generate 2 to 4 times the wealth and income you could otherwise hope to generate on your own without such methods and guarantees. Today's legal, accounting, financial, and tax professionals are not required to know what you are about to discover. So the financial condition of the great majority of senior citizens tends to be bleak. Here's your opportunity to grow beyond this tendency. Do you think the government will be able to give you enough income to maintain your lifestyle when you can't or don't want to work anymore? Only 11 out of every 100 individuals turning age 65 this year has annual income of at least $50,000. That's barely 1 in 10 people. And some of those 11 individuals are still working to enjoy that much annual income. How can you accumulate enough savings to beat inflation and enjoy a comfortable income when you can't or don't want to work anymore? If your age is 28 to 30, you should already have accumulated a quarter of your post-career savings. So what can you do to try to catch up with what you need to have in post-career savings? To maximize your wealth generation and also protect your wealth against degeneration, you need to understand and address inflation, interest, risk of losses in the market, risk of losses due to taxation, wealth contributions, and elderly medical costs. Since inflation is persistently eroding your economic power, you have to generate significant interest to generate significant wealth and stay well ahead of inflation. Interest affects not only your growth, but also your distributions. For example, the rule of 72 says that your 4% bank CD will double in value every 18 years. So if you have 36 years, and if you start with $25K, ignoring taxation, in 18 years you'll have $50K. And in another 18 years you'll have $100K. And at 4%, ignoring taxation, you'll be able to enjoy distributions of $4K a year. With $200 monthly contributions, ignoring fees and taxation, your 6% fixed annuity will double in value every 12 years. So in 36 years, you'll have $265K. And at 6%, you will be able to enjoy distributions of nearly $16K a year, or $596K and nearly $36K a year after 36 years of the maximum allowable contribution of $450 a month into your 6% fixed IRA, or about $2 million and $120K a year after 36 years of the maximum allowable contribution of $1,500 a month into your 6% fixed 401K, if your employer offers one, and if you can afford the maximum allowable contribution. The basic, simple fact about any variable product you might choose for your wealth accumulation strategy is, no matter how much interest and growth potential it offers, and no matter how much you can afford to contribute to it, you bear the permanent risk of losses, losing everything in the market, everything you gain and everything you contribute. The basic, simple fact about just about any product you might choose for your wealth accumulation strategy is, no matter how convenient it is, and no matter how much you can afford to contribute to it, you bear the permanent risk of losses, losing some of your money to taxes. Sooner or later, taxes will at least partly deplete or degenerate your wealth and distributions. So we've just covered the essence of the 3 principles for financial prosperity. Efficient application of the Rule of 72, which defines how frequently your account value doubles in size. Avoidance of market losses, which guarantees that you retain all of your previous growth and receive full distributions regardless of market downturns. And avoidance of taxation, which gives you the further advantage of lawfully tax-free growth and distributions. For the best possible results, apply all three principles rather than just the standard one or two. Naturally, the best possible results are achieved with the greatest possible wealth contributions. Obviously, however, no matter how good the strategy for earning interest and avoiding risk, heavy contribution restrictions combined with poor contribution efforts has dismal results, such as only 11 out of every 100 individuals turning 65 this year has annual income of at least $50,000. The urgency of sufficiently funding post-career savings is compounded by elderly medical costs. A couple turning 65 can expect to spend at least $250,000 out of pocket for medical expenses. So how can you apply all three principles for financial prosperity and also make the greatest possible wealth contributions? Indexed growth has made it possible to avoid the risk of losses in the market and thus to increase both the net earned interest rate and the frequency of doubling of account values. An accumulation of wealth inside life insurance has made it possible to avoid the risk of taxation on the resulting gains and lifetime distributions. Unlike every other program with contribution restrictions, an Index Universal Life, or IUL contract, offers contribution restriction flexibility. An IUL is able to outperform everything else because it alone combines such flexibility with all three principles for financial prosperity, resulting in the best available interest for the most frequent doubling of account values, the best possible accumulation of wealth, and the best possible tax-free distributions for life. Avoidance of the risk of taxation also makes sufficiently funding an IUL easy, since all three branches of the U.S. government and all 50 state governments have given you specific authorization, literally a written invitation, to use your income tax costs to fund such a periodically doubling, permanently risk-free, tax-free, compound interest-bearing wealth account. Statistically, the IRS alone will collect from each of you hundreds of thousands of dollars, if not $1 million or more, in voluntary contributions of income tax during your lifetime. However, you have the constitutional lawful right to divert as much as you wish of your share of this cost to permanently risk-free, tax-free, compound interest-bearing wealth and enjoy a healthy 5 or even 6-figure annual tax-free income for the rest of your life. However, what if you're like many people who feel they really don't pay very much in income taxes? What if, instead of hundreds of thousands or even $1 million, you spend only about $50,000, barely $1,000 a year during your working career, in federal income taxes in your lifetime? Well, even only about $50,000 over the course of a 47-year working career could become more than $1 million in post-career savings and a 6-figure annual income for the rest of your life. Doing this practically without even trying, an 18-year-old puts just $100 a month of excess income tax costs into an IUL, earns just 10% interest for 47 years, and retires at age 65 on just over $1.25 million and a tax-free monthly income of $10,000 to $11,000 for life. The 18-year-old diverts just $56,400, really nothing out of pocket, earns nearly $1.25 million in interest, and enjoys a 6-figure tax-free income for the rest of his or her life. The method for such diversion is nearly identical to estate planning. Unlike estate planning, however, this method lawfully avoids not only estate tax, but also income tax, allowing you to make the greatest possible wealth contributions without being concerned with affordability. Moreover, unlike estate planning, this method is inexpensive, allowing you to get started at minimal cost, typically as little as $200. All you need is to gain and exercise private membership in a private, lawfully income tax-free organization with a mailing address and bank account. State register a limited liability company, or LLC if you're not already legally organized to do business in your state, and establish your permanently risk-free, tax-free, compound interest-bearing wealth account. Then simply execute and carry out a private contract between the two organizations. Increase expense to your organization, increase revenue to the tax-free organization, and use the realized tax savings to fund your permanently risk-free tax-free compound interest-bearing wealth account. You can even let your excess income tax cover the cost and literally pay nothing out of pocket to generate a healthy 5 or even 6-figure annual tax-free income for the rest of your life. For the absolute best possible results, apply all 3 principles for financial prosperity to the greatest amount of time and the greatest possible contributions. Even if you're not 18 or even 28, you can still beat the results of any other method and enjoy the greatest possible wealth generation and monthly distributions by lawfully diverting your excess income tax costs to a permanently risk-free tax-free compound interest-bearing wealth account. Your potential is so much better when you use everything that is available to you rather than just some of what is available to you. Knowing, understanding, and exercising your constitutional rights and privileges is a mature thing to do and provides great rewards and great satisfaction. Making your wealth a matter of law is a responsible thing to do and provides guarantees and security. Using your income tax costs to fund your post-career savings maximizes your contributions. Earning the best interest accelerates your growth. Avoiding losses in the market and losses due to taxation enhances your wealth and distributions. Free guidance and coaching are available. A do-it-yourself video e-course is available for those who wish to do everything on their own. With or without the e-course, you can do nearly everything online with minimal consultations.